I'm Emily Chang, and this is the best of Bloomberg Technology, where we bring you all our top interviews from this week in tech. Coming up, the tech earnings bonanza. All the major players reported this week: Apple, Alphabet, Amazon. We'll break it all down ahead. Plus, we'll narrow in on Facebook's hit and miss, our look at fourth quarter earnings for the social media giant, and the most concerning metric for Wall Street. And a new alliance takes aim at healthcare, the implications for the industry as Amazon, Berkshire Hathaway, and JP Morgan join forces. But first, to our lead. We had a slew of big tech earnings this week, and getting most of the attention was Apple. Anxious tech investors awaited their first look at iPhone X sales strength. I traveled to Apple's new headquarters in Cupertino, California on Thursday to sit down with Apple CEO Tim Cook right after earnings were released. We parsed through some of the main takeaways with Forrester's Julie Osk and our Bloomberg editor-at-large, Corey Johnson.
It sounds absolutely solid to me. I think certainly when you look at a device like this, it's incredibly sophisticated. It's got a bit of a higher price point. And certainly when you consider that the replacement cycles for consumers are slowing, I think it's a very strong number. And while people like to talk about and point to the high price point as maybe something that's deterred consumers from upgrading, you also have to keep in mind that as a part of the total cost of service, the hardware isn't the biggest chunk, it's the service.
We also talked about the performance of the iPhone X in China. There's been concern that the price was too high. And when I asked Cook about that, he told me in China, the top 5 selling smartphones, every one was an iPhone. It's the same situation in the U.S. In Japan, the top 6 out of 7 smartphones are iPhones. So not bad, he said. I feel great about that. Corey, what do you make of these numbers, given all of this fuss over whether this iPhone X was simply too expensive?
Well, I think the numbers show that it wasn't too expensive. There's a lot of different ways to look at this. Apple made a lot of money selling a really expensive phone. They're clearly defensive about what we're hearing about a slowdown, what we got out of Qualcomm yesterday, about the fact that unit sales on a year-over-year basis were down, even though this phone is a technological marvel. But I think that Julie's point is a really, really important one, and it can't be overestimated. Looking not at the competitive world, but just at Apple itself, that Apple's trying to move its financial model towards a service model and away from being purely about hardware. And so that the introduction of new hardware isn't about the hardware itself. It's the Trojan horse to services that customers will pay for over time. And so over time, what we have to evaluate is not just how well the phone sells, how many Trojan horses get out there, but their ability to pull along other revenues over time. And I think as a result, that's just going to take a little bit longer. We didn't know when the iPhone launched that Uber and Instagram would be invented and become the killer apps for this device of a smartphone and of the iPhone. So we might not know in the first 15 weeks or so of the existence of the iPhone X what the killer app is, but it might. But Apple's stated goal is that it'll be an Apple app, and that the next Uber and the next Instagram won't be created by somebody else, but it'll be owned by an Apple profit through the services aspect, not just the hardware sales.
Now, I also did ask Tim Cook about so-called Batterygate. Bloomberg has reported that the Department of Justice, the SEC, are asking questions about this whole iPhone battery replacement issue. He couldn't comment on the specific agencies, but said that there are agencies around the world asking questions, and they are cooperating with that. He also singled out the Apple Watch and how quickly that is growing, that this category would be the size of a Fortune 300 company on its own. Julie, how optimistic are you about the non-iPhone products in the portfolio?
Yeah, so I think this builds on the point that Corey was making that's dead on. There's a couple things that are really key as we look forward around Apple's success. And one of them, as Corey pointed out, is the services, right? That makes these devices more valuable. And the second thing is the more devices that a consumer owns within the Apple ecosystem of products, then it's more valuable that each of these products become, and more likely that Apple's going to be able to sell services like music, payments will become embedded into my day-to-day life and things like that. So both of those things are really important as we think about Apple's momentum going forward.
Of course, we know that Apple is now bringing billions and billions of dollars back from overseas thanks to tax reform. I asked Tim Cook if that was going to be changing anything about M&A strategy. Might they consider buying some bigger companies like a Netflix or a Tesla? He pointed out to me we've acquired 19 companies in 2017. That is a company every 2 to 3 weeks. We stay constantly in the market. We look at companies tiny to big. And the key question is always, would it improve the life of a customer? Can it help us build better products? That is how we decide. Corey, what do you read into that?
Well, I mean, I want to go back to your Fortune 300 comment. I mean, that seems ridiculous. Fortune 300, there's a Fortune 500, there's a Fortune. I understand what he means by that, but on the day when they take the time ink sign off of a building and he's still pointing to lists that don't exist anymore, there is no Fortune 300 list. And I think that the cherry picking to try to dress up these results as being a little bit better is stretching a little bit. Apple sold fewer phones after the biggest release they said that they've ever had. They sold fewer phones than they did a year before when they didn't have such a big release. Meanwhile, and certainly some of that's got to be about price. They charged a lot of money for this phone. They brought in a lot of money for this phone. The revenues are fantastic. The profits are fantastic. The free cash flow is fantastic. It's all the things you expect from this behemoth of a company. But the success of the phone is tepid. And so, the success of the watch business pales to the phone because the phone has such a historically amazing growth rate and size of the business here. But fundamentally, it's going to be about the phone sales going forward. And I think the reduction of the guidance for the next quarter in terms of revenues, so much below what Wall Street had been at, and so much what Wall Street expected in terms of growth, based on where Apple had sort of directed them. I think it really shows that Apple's up against it a little bit with this expensive phone.
Forrester's Julie Osk and our Bloomberg editor-at-large, Corey Johnson. Still ahead, we will zero in on Facebook. CEO Mark Zuckerberg said time spent on Facebook decreased 5% in the fourth quarter. What it means for the social media giant. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Two cryptocurrency exchanges are facing scrutiny from U.S. regulators. The U.S. Commodity Futures Trading Commission sent subpoenas in December to both Tether and Bitfinex. The firms share the same CEO. Tether issues a widely traded coin and claims it's pegged to the dollar, but has yet to verify that it holds $2.3 billion in reserves. And Facebook has banned a whole sector of ads on its platform. And no, it has nothing to do with Russia and the U.S. elections. The social network is banning ads that promote cryptocurrencies, initial coin offerings, and binary options. Facebook says these ads are, quote, frequently associated with misleading or deceptive promotional practices. And Facebook reported its fourth quarter earnings results Wednesday. Here are the highlights. Revenue coming in at nearly $13 billion, beating the highest estimates from analysts. Monthly active users totaled 2.13 billion, while daily active users came in at 1.4 billion, slightly below forecasts. And for the first time, daily actives in the U.S. declined. We brought in David Kirkpatrick, CEO of Techonomy and author of the book, The Facebook Effect, and Jitendra Rawal, analyst at Bloomberg Intelligence, to discuss.
That raises the question about the changes that they're making to the platform, and would it accelerate this trend this year? It could be a temporary shift, if you may, to these metrics, but Instagram and ad pricing still are big offsets for them this year. So I think more commentary on the call would be focused on what those changes mean to this trajectory of the decline that we're seeing here.
Meantime, David, Zuckerberg saying that the changes that they are making on Facebook are decreasing user engagement. How, do you look at these results?
I wouldn't put too much importance on the drop in daily active users globally, the significant, or the decline, the miss, I should say. what Jitendra mentions about an actual decline in the U.S. is interesting and could be a response to Facebook's manipulation of the way the news feed works. And I just want to point to something in the release, that really makes me wonder how the world ought to respond to this notion of them making these changes to try to make us all do better. It's sort of like a very manipulative attitude. Listen to what he says. He says, "We'd made the decision to show fewer viral videos to make sure people's time is well spent. And we reduced time spent on Facebook by roughly 50 million hours every day." Now, that's global. But really, doesn't it sound a little bit like Geppetto and the Strings of Pinocchio or something? Oh, we're going to show you fewer viral videos because we know what's good for you. I think they're on very thin ice with the way they're handling these problems, and it's very hard to know what really should be done. But I'm not sure that just telling us to watch fewer viral videos is the answer.
The Facebook earnings call has started. Mark Zuckerberg, Sheryl Sandberg, Dave Wehner, the CFO, speaking on that call. You can watch the live headlines as they happen on our blog on the terminal T-Live Go. Jitendra, is this thin ice where now Facebook is swinging in the opposite direction, trying to do better for its users?
On the core platform, I believe so. But having said that, they do have Instagram up their sleeve. That platform is heading towards 1 billion people. Right now, it's just in the beginning phase of monetization, and it could be much more material in terms of their revenue contribution longer term. So I think ad pricing, offsets, and Instagram would be, again, my core points. As far as the changes are concerned, if they are able to show that this trajectory of daily active users is just temporary, but the amount of time eventually improves, I think the ROI will show up on advertisers' front and they'll be fine.
David, do you think they're going to have to make these hard choices on Instagram as well?
It's possible. It's interesting that Instagram hasn't been hit with the same kind of concerns as Facebook's core platform, even as Instagram is clearly getting more and more advertising revenue. I just want to point out that despite all the political and social challenges that Facebook faces, though, the financials of this quarter are spectacular. They have the highest operating margin they may have ever had. Their profits, their revenue went up just about 50%, but their costs only went up 30%. That's like on a $12 billion per quarter revenue run rate. This is a profit machine that has a lot of money to experiment with these many problems that they need to solve.
I also want to point out another number. They've increased headcount 47% year over year. They now have 25,000 employees. We know that they've been hiring people to combat things like fake news, to combat things like offensive and disturbing content. What do you make, Jitendra, of the sheer scale at which the employee base is growing to respond to some of these concerns?
So they have a lot of unmonetized properties as well that they have to support billions of people. So you have Messenger, you have WhatsApp, and on top of that, I don't know if hiring people is directly correlated to the actual impact of that in terms of reduced fake news and better quality content and things like that, but at least they're making the effort. And I feel this year, based on what Mark Zuckerberg has said, that number might be even bigger.
Zuckerberg speaking on the call right now. You can see what he's saying on T-Live, reiterating the importance of personal connections and how passively consuming public content takes away from the time people spend connecting with each other. So there you go again, David, to some extent, sort of moralizing the way we use Facebook, going strong there.
It's interesting. Moralizing is an interesting word. Clearly the world wants Facebook to have less of a toxic effect on society. And I would argue, on balance, Facebook still has a phenomenally beneficial effect on society. But there are some very toxic components that we've been hearing about, whether it's addiction, political manipulation, etc. That's a global problem, not just in the U.S. But it's interesting to ask yourself whether the world really wants these people with very little transparency to be the ones kind of telling us what's good for us. I think it's a very slippery slope, and I think they could get some pushback for that itself. So it just underscores what a challenging position they're in as they try to make us stop thinking that they're doing us harm.
That was Bloomberg's Jitendra Rawal and Techonomy's David Kirkpatrick. Coming up, Amazon has thrown the healthcare business into disarray, joining forces with JP Morgan and Berkshire Hathaway to target the industry. What it means for the larger health tech industry next. And Taiwan may be positioning itself to become the next cryptocurrency hub in Asia following the crackdowns in China and South Korea. Our full coverage from Taiwan later this hour. This is Bloomberg. Amazon, Berkshire Hathaway, and JP Morgan are planning a new company to provide their U.S. employees with tech solutions for simplified care at a, quote, reasonable cost. This could possibly be a massive disruptor for the industry, where rising costs are under the microscope. The trio is an unexpected partnership, but what is not a surprise is Amazon's expansion into yet another sector.
There is absolutely nothing to stop this company.
Amazon's clearly a real powerhouse in the digital space, in the online space, and their acquisition of Whole Foods is a game changer for them.
The real risk here to the incumbent payments players like Visa and PayPal and MasterCard is that Amazon decides to build its own PayPal.
Amazon has been great, all the things they've done, but what we can't do is sit idly by and allow them to take our business.
This company, I think, could double from here to $2,000 per share.
They are going to be a force. They're going to be a force in content. They're going to be a force in search. As I said, 55% of U.S. product searches we calculate are initiated on Amazon. And then last but not least, on advertising.
Wherever Amazon is bumping up against the other three, it's winning. On product search, it had 44% share in 2015. Now it's 55%. Where it's bumping up against Apple and voice, 70% share of voice in the home. Where it's bumping up against Apple and media was number 7 in percentage of share during prime time. Now it's number 3. Fastest growing media group. It's literally kicking the butt of Siri in full view of everyone. Amazon's our first $1 trillion market cap company.
Jeff Bezos had this to say about the deal. The healthcare system is complex, and we enter into this challenge open-eyed about the degree of difficulty. We caught up with Bloomberg News healthcare reporter Zach Tracer in New York, and in Boston, Steve Krause, a partner at Bessemer Venture Partners, who leads the firm's healthcare investing activities.
What a week for healthcare innovation. First, Apple getting into the space, and now the announcement that Amazon and JP Morgan, Berkshire Hathaway made. I think it is all about cost for these large companies. If you look at Amazon, you know, they spend somewhere between $3 and $5 billion on healthcare alone for their company. If healthcare is growing 5 to 7% per year, which is threefold times inflation over the last 40 years. You think about that for Amazon, that's $250 million of cost at least, and that's about 1 to 2% of their profit. So the fact that they're getting to healthcare, that they've been frustrated with the way it's worked for so long, and they're going to bring some of their know-how to try and disrupt this industry, it doesn't surprise me at all.
Zach, what more details do we have about how exactly this will work?
You know, the really interesting thing is that we just don't know that much about how this is going to work. What we know is that Berkshire Hathaway, JP Morgan, you know, and of course Amazon are teaming up, you know, essentially to take on healthcare, to take on this really big cost, like Steve pointed out. You know, they say that they're, you know, going to look at transparency, look at doing some stuff digitally to, you know, bring down costs or to provide care to their employees. But it remains to be seen, you know, does this mean that they're going to try to kind of, you know, replace some of the middlemen in the system, some of the folks who provide insurance now or drug benefits now? I mean, you know, that certainly investors are concerned about it, but we just don't know yet.
Jamie Dimon saying the three of our companies have extraordinary resources, and our goal is to create solutions that benefit our U.S. employees, their families, and potentially all Americans. Warren Buffett saying the ballooning costs of healthcare act as a hungry tapeworm on the American economy. Our group does not come to this problem with answers, but we also do not accept it as inevitable. Rather, we share the belief that putting our collective resources behind the country's best talent can, in time, check the rise in health costs while concurrently enhancing patient satisfaction and outcomes. Steve, what kind of challenges are they going to run into?
Yeah, well, I think this is a classic buy versus build decision for them. They've been buying this for so long. As Zach said, there's been intermediaries, insurance companies, pharmacy benefit managers who have been trying to do this for these companies for a long time. And today, not surprising, their stocks are down significantly, anywhere from 4 to 6%. Companies like United Health, CVS, Express Scripts have been hit. I think Amazon and JP Morgan and Berkshire are going to try to build this. And so two things they need to do. One is that they actually need to build direct relationships with healthcare systems and with providers. They need to do direct contracting, because that's actually where a lot of the cost is. The cost of healthcare is actually care itself, and so they need to get down into where care is provided and develop those contracts. That's not an easy thing to do. Secondly, they need to bring the know-how that they have around engaging with the consumer, around paying. That's obviously where JP Morgan comes in. They have expertise in payment rails, around underwriting risk, right? It's you're talking about a broad population. You have to underwrite their healthcare risk and healthcare costs. That's obviously where Berkshire Hathaway comes in. And then Amazon comes in with the consumer engagement know-how and, frankly, the analytics and the data science around segmenting a population according to their risk and how healthy or not healthy they are. So I think they've got a lot of road to hoe. There's a lot of wood to chop, but frankly, I think a company like Amazon, they've proven to take down, as you showed earlier in your segment, almost every single industry. The healthcare economy is 18% of GDP. I don't see why they wouldn't start attacking this industry and really disrupting it.
Right. Zach, how much could this actually threaten the incumbents and industry standards? I mean, they're going to be offering this to their employees initially, but the goal, could potentially be, other customers across the United States. How much could this actually change the industry?
Well, investors are saying this threat is real. Take this seriously. Whether that's a threat to United Health or the big health insurers, Cigna, Anthem, down quite a bit today, or the pharmacy supply chain, is still not clear. But I think that what these companies are going to discover as they move through this is, like Steve pointed out, some things they're going to want to build, they're going to want to do themselves, and some things they may say, you know what, we'll let United Health handle that, or we'll let CVS handle that, because they're better at it, they can do it at scale. But the mix remains to be seen, and I think that's why people are so nervous today.
That was Zach Tracer with Bloomberg News and Steve Krause with Bessemer Venture Partners. And Amazon's move into healthcare is just the latest in a string of major announcements from the company. We took a look at Amazon's continued expansion.
Amazon's quest for world dominance continues, almost seemingly unchecked. Since it unveiled the convenience store of the future, its Amazon-like rainforest-infused office spheres, and its $13.7 billion purchase of Whole Foods, a purchase that pushes Amazon deeper into the $800 billion grocery market, where most spending remains with traditional brick-and-mortar retailers like Walmart. Now, Amazon's share price has rocketed up over 66% in the last year, and it surpassed $1,400 for the first time on Friday, fueled by investor enthusiasm around its e-commerce growth and its profitable cloud computing business. And let's not forget Amazon's growing advertising business that promises better profit margins than online sales. Now, some investors aren't so bullish, thinking this Wall Street darling is due for a pullback. After all, big spending that outweighs revenue growth has historically been the thing to trigger an Amazon sell-off. Investors are also watching for signs of growth for Amazon Prime subscribers, the service that can turn occasional shoppers into devotees. The fourth quarter is an ideal time to boost those subscribers thanks to free 2-day shipping during the holidays. But could a company that has 90 million members and is planning to open a second U.S. headquarters that wants to take over your home appliances and get into the health insurance game be reaching a saturation point? We'll be watching.
Still ahead, we get back to the big headlines from the week, and that is earnings. Amazon and Alphabet also reporting this last week. We'll bring you the main takeaways. And a reminder that all episodes of Bloomberg Technology are live streaming on Twitter. Check us out at Technology, weekdays 5 p.m. in New York, 2 p.m. in San Francisco. This is Bloomberg. Welcome back to the best of Bloomberg Technology. I'm Emily Chang. Now back to the slew of tech earnings this week and turning to Alphabet, which reported Thursday after the bell. I spoke with Alphabet CFO Ruth Porat right after earnings were released and discussed the takeaways with Crawford Del Prete of IDC Research, along with our very own editor-at-large, Corey Johnson.
The other parts of the business are just costing them too much. The expenses grew faster than revenue in the quarter. So what you see is that while some of their new efforts are making great progress, particularly the clip you just showed, or the clip you just played about their cloud business is growing. Their cloud business is starting to get to scale. But it's, they are the number 3 right now in a 3-horse race. And they really need to do a lot of work in order to get that business to contribute on a scale that's going to allow them to not only continue to grow, but pay back some of the investment that they've made in that business, which is kind of still what you're seeing in the numbers. Now, obviously, there's other spots of the numbers as well. YouTube has had a very tough year. I think they still have to consolidate some of the other businesses where they've been kind of making their other bets. But the bottom line is that the business hasn't scaled the way they needed to, and I think that's why you saw the miss.
I also just got off a call with Alphabet CFO Ruth Porat. We talked about how the shares were down, and she told me we're really proud of the ongoing strength of the business and overall revenue growth across all regions. We're staying focused, as we always have, on long-term investing for the businesses, and intra-quarter variability will be what it is. Corey, how concerned should we be?
Well, I don't know if we should care at all, but I don't know how concerned should Ruth be. I don't think terribly. I saw some things sort of within the numbers, deeper into the numbers, that looked reasonably positive for the company. And the two things that, I'm no genius for tracking this stuff, but the two things that I think are the most important metrics outside of obviously the generation of free cash flow, but is the click growth and the value of a click. And what we saw from the click growth, that is how many times people are clicking on ads, both at the Google sites and the other sites that Google powers ads for, it grew faster than last year, a little down from what we've seen in recent quarters, but 43%, that's better than the 36%, and that's in a year-over-year change, better than the 36% growth of a year ago. I think that's pretty good, but more encouraging, and then maybe I'm looking for good news here, and I shouldn't really care, but we like Ruth. If you look at the devaluation of the ads, right? As ads have gone to mobile, users pay or marketers are paying less and less and less. Unlike Facebook, where marketers are paying more, the price per click, the value per click, how much the marketers are willing to pay. They don't tell us the number, but they show us that the number's not getting appreciably worse. It was down 14% year over year, but that's less than recent decreases we've seen, and I'm sure they're hoping at Google that decline will stop.
Corey Johnson and Crawford Del Prete of IDC Research tackled Amazon's earnings report, also out Thursday. Take a listen.
We're talking about Amazon, where the biggest success story in these results is what happened with Alexa and how Alexa's become this giant platform with over 30,000 skills available. How, as you mentioned, Jeff Bezos said in the press release, they're going to double down. And that we're at this really important inflection point where the most important device in the world, in the iPhone, I just talked to Scott Galloway on Bloomberg Radio, and he says this is the moment. This is exactly right now, today, the most important moment in technology we've seen in a decade, where the leader in technology is no longer Apple, and now it's the Amazon Alexa. And that this inflection point is so important because computing is moving from the phone to voice, and Amazon owns it, and Apple blew it, and you can see it in the results that both companies announced today. And the open platform, the Apple-like platform, with open to multiple developers and also to multiple hardware developers. Look at what Sonos is doing with the Alexa, for example. That Amazon is reaping the benefits of this. Amazon is getting services revenue already in the ways, 2/3 of American households are Amazon Prime members. Amazon Alexa is part of that ecosystem. They're already in the place where Apple says it wants to be.
I did have a fairly long conversation with Tim Cook here about the HomePod, which is now out to the public in a matter of days. And I asked, do you think you missed a category that you let Amazon get away with that you really should have led? And he said, I think quite the opposite. I don't think we missed anything. And he talked about this idea that a personal assistant, really the number one personal assistant, is your phone, and they have Siri there. And their conception of HomePod is really much more as, yes, a personal assistant, but more importantly, as a music and audio device Well, look,
I mean, they missed their release date. They missed their own release date. Yeah.
History still has yet to be written. We don't know how the HomePod is going to do. So I want to bring in Crawford on this. Crawford,
Sure.
What do you think? Do you think Apple missed it? Can they catch up?
Yeah, so look, to Corey's point, Alexa's got over 4,000 home-connected devices now in their ecosystem. So has Apple missed it? Apple may not have missed it, but boy, they sure are looking at taillights going way over the horizon. They're going to have to do one thing, and that is attract massive amounts of developers to their platform to pay attention to HomePod and to really then go out and do all the missionary work to get people onto this platform. I mean, I just want to add one thing to what Corey said, and that is that AWS grew 45% in the quarter. As AWS gets stronger, it's a platform that brings developers in to enable things like Alexa. So now they're into this virtuous cycle that just gets stronger and stronger and stronger and stronger. And that's a pretty big moat. Is it unassailable for Apple? No, nothing's unassailable, but Apple has got a heck of a lot of work to do in order to close a gap.
And just for viewers just turning in right now, we are listening to the Apple call. The earnings call is underway. Tim Cook's on the call right now. In fact, he's talking about service revenue. To your point, Crawford, he says they're going to double service revenue by 2020. I think they put up $4 billion in the quarter, so it was an impressive quarter in the other category, which services is a part. But, to your point, I mean, Amazon's business here, web services does fantastic, but they're also learning through web services about what everyone's able to do on the web. And this notion of a completely hardware independent distributed service business in the world of technology, separate from selling people lots of stuff, dropping off lots of boxes, these guys are clearly the leader in it and growing at a fantastic pace and throwing off a ton of profit.
Yep.
So Tim Cook told me, look, for what it's worth, we already have a personal assistant in 1.3 billion people's hands, and that is the iPhone. Moving on, though, let's talk about the cloud, because we're going to get into that with Alphabet results coming up. Corey, dig into the AWS numbers for me and just simply how quickly this business is growing.
So it's growing at a fantastic pace at a really large scale. And what we see, I put a couple of charts together that kind of show what's happening at AWS in terms of just margins. And I mentioned it in passing there, but Amazon loses money basically in the selling of stuff, and yet the margins they put up of 26.5% in the quarter, really terrific and even better than last year in that important fourth quarter. Even for AWS, it's an important quarter because there's a lot of demands on the service from all their other users because everyone's doing a lot more commerce then. But compared to the rest of their business, it drove the rest of the results to a 3.1% profit. So Amazon was profitable selling packages, selling stuff in the U.S., very profitable in AWS, and lost money in Europe selling stuff. And so the result was they had a really fantastic cash flow from operations business. They got 7% rise in cash flow from operations in a year-over-year business, and that let them sink a lot of money, well, as they always do, into spending and building. CapEx was actually up. Free cash flow was down. Why? Because they spent a lot of money building a lot of stuff so that we're going to see a lot more quarters like this. And, it's worth noting that Amazon is not working on the last quarter of the current quarter. Amazon right now is working very hard on a quarter 3 years from now. And these results kind of show what they were working on 3 years ago. Whereas, Apple's still trying to get out the speaker product that you're talking about that they announced and that they missed the date of earlier in the year.
Yeah, and Corey, I just want to say that my bet would be, go ahead. I just want to say my bet would be that those AWS margins expand going forward as they start adding more and more tools that developers can use that guess what they charge for, things like serverless, things like Lambda. But the trick is get the developers in, get people building apps, and then get people when they're managing their instances to use more of Amazon's developed tools. So my bet is that could be a really scalable business, even more scalable than it has been going forward.
That was Crawford Del Pret of IDC Research. I'm Bloomberg's Corey Johnson. Well, Elon Musk's tunneling startup, Boring Company, started selling a $500 branded weapon online last weekend. Posting on Instagram, Musk said, quote, "I want to be clear that a flamethrower is a super terrible idea. Definitely don't buy one." unless you like fun. And it seems like his quirky promotions on social media are paying off. Come Thursday, Musk declared that he was already sold out of the flamethrowers after just 4 days. 20,000 flamethrowers at $500 a piece means he just raked in $10 million. The money will be used to fund Musk's ambitious project to build underground transportation systems. The company began digging a 30-foot wide test tunnel in LA a year ago. And sticking with Elon Musk, it will be a sellout crowd when SpaceX has its first launch of its new Falcon Heavy rocket. NASA has sold out $195 tickets featuring a champagne toast and a commemorative glass. Musk's new rocket could be launched as soon as February 6th from Cape Canaveral. Coming up, cryptocurrencies continue to face serious hurdles in Asia, but one country is looking to be the next big hub for these digital assets. We'll bring you to Taiwan next. This is Bloomberg. Japan's Coincheck says it was hacked after it lost almost $500 million in digital tokens last Friday. The episode has prompted calls for stricter industry oversight. Officials at Japan's finance ministry said the country will conduct on-site inspections of exchanges, and cryptocurrencies will most likely become an issue at the next G20 meeting. Meantime, Polychain Capital has decided not to go public in Canada after holding talks with bankers about an IPO. Polychain, which invests in blockchain assets, had approximately $250 million under management as of last September. The crypto hedge fund is backed by venture firms Sequoia Capital and Andreessen Horowitz. And sticking with cryptos, Taiwan may be positioning itself to become the next cryptocurrency hub in Asia following the crackdowns in China and South Korea. But as our chief North Asia correspondent Stephen Engel reports, the theft of $500 million from the Coincheck exchange in Japan is raising fresh concerns about fraud. Take a listen.
The 23 Brew Company in Taipei is at the intersection of old versus new. In a micro sort of way, it's an establishment that is challenging the establishment, or at very least, the established way of buying around. You see, patrons here can, if they so desire, pay for their microbrew pints with Bitcoin.
We've always been forward thinking here, so we want to help support Bitcoin and help kickstart that in Taiwan. You know, give power back to the people.
In light of the Coincheck heist in Japan and crackdowns in China and South Korea, Taiwan is still trying to figure out where it stands on cryptocurrencies. Should the government and regulators suppress the market or set it free? Broker MyCoin believes Taiwan's state of statelessness, if you will, works to its advantage.
This sort of awkward position that Taiwan finds itself in this world is not unlike the awkward position that Bitcoin finds itself in the regulatory or in the established banking world. I'd like Taiwan to be known as the ROC, except this time around it's the Republic of Cryptography.
I think we should really take advantage of this wave and really fill the void that's been left in this region.
Chu says within the government here, risk aversion and red tape run deep. And yet, led by a younger breed of lawmakers like Xu, the Legislative Yuan did pass a regulatory sandbox bill late last month to allow fintech experimentation. As for initial coin offerings here, that could be tougher, given the fraud and money laundering fears.
I think right now it seems that government is passive or choose to avoid talking about it, but you can't really run away from it because it would just go underground and it would have a lot of implications. For me, I think Taiwan can become a ICO trading hub in Asia.
You know, what happened on the mainland was too much too soon, and it violated that fundamental tenet of do no harm. Here in Taiwan, things are a bit slower, you can say, but in a way safer as well.
For now, Taiwan is taking perhaps some more palatable first steps into the crypto world.
Once you start seeing that Bitcoin sticker in more and more places, I think people will start to get into it and say, oh, wow, I can actually use Bitcoin in my everyday life. And this is where they can start having a beer at the local pub.
And joining us now, our Bloomberg Chief North Asia correspondent, Stephen Engel, who spent all last week in Taipei. So, Stephen, do you think this Coincheck heist situation derails Taiwan's hope of perhaps becoming a cryptocurrency hub?
Yeah, it depends on who you ask whether this is good or bad. It could, of course, enhance regulation. It could enhance oversight, but it also could put a damper, of course, on the kind of innovation that Taiwan is trying to achieve, at least a younger breed of lawmaker that is trying to facilitate this revolution, if you will, if you want to call it that, through that Innovation Act that they did pass on December 29th. But it's interesting, this whole story in Japan blew up just as I was wrapping up my reporting, and boy, did I get a lot of messages from the various people that I did talk about. They were also wondering how this was going to play out, because keep in mind, the cautionary tale for Taiwan has always been what has happened in China with the fraud there. Japan was always looked upon as being kind of the model for which to build a cryptocurrency hub in Asia.
So, you know, Taiwan obviously has a lot of advantages. There's a lot of processing power on the island. How could we see them exploit some of these advantages? You know, what about Bitcoin mining?
Oh, mining. Yeah, that was a question, of course, that was put to Taiwan Semiconductor, TSMC, in its latest results when they showed a big pop-up in revenue that led to the bottom line for their latest results from all that processing chips that are needed for mining. But, you know, it needs a lot of power, and this was a big concern of some of the lawmakers that I talked to. Taiwan can do, you know, a few things really well, but once they start stretching that power grid, which they do in the summertime, when all those factories, the chip factories and the like, start cranking up their air conditionings, there is severe power shortages in Taiwan, especially in the summertime. In fact, when we were doing live hits with you that morning last week, the whole neighborhood went black because of a power outage. So that is probably going to prevent Taiwan, at least for now, being a mining hub.
Bloomberg's Stephen Engel there. Still ahead, eBay's shift away from its longtime partner is not paying off for PayPal. PayPal CFO John Rainey joins us with what's next for the relationship between the two companies. This is Bloomberg. Ride-hailer Lyft is expanding to Europe. The San Francisco-based rival to Uber is opening an office in the southern German city of Munich, home to the likes of BMW and Siemens. This comes after it announced an expansion to Toronto in November, its first outside the U.S. Lyft hasn't said how many people it's hiring for the office, but that they will work on the company's autonomous driving efforts. And Alphabet's Waymo plans to roll out a ride-hailing service using driverless cars this year. The company says it just bought thousands more minivans from Fiat Chrysler to make it happen. The companies aren't saying exactly how many vehicles are involved or the cost. It's the third such deal between the Italian-American car maker and the search giant. Waymo scored 100 Chrysler hybrid minivans in 2016 and another 500 last year. Well, eBay rose to a record this week after giving an optimistic revenue forecast and unveiling plans to shift its payments business from longtime partner PayPal to Aiden BV, a global payments company based in the Netherlands. Shares of PayPal tumbled on the news. We spoke with PayPal CFO John Rainey on Thursday.
The main takeaway from this is that this is a natural evolution of our partnership. It is the next chapter, if you will. And for us, this was completely anticipated, completely built into our financial plans, and does nothing to change our long-term earnings growth potential.
The market didn't anticipate it, however, and there's concern about how it will impact payments volume and how you'll replace that. So how much of PayPal's payments volume comes from eBay, and how do you intend to make it up?
So today, eBay is 13% of our total volume, and it is the slowest growing part of our business. If you go back and you look at the 10 quarters since we separated from eBay, the average revenue growth for our eBay part of the business is 4%. The rest of our business has been growing at 23%. And so if you fast forward to the end of the operating agreement, you can see that they would be a much, much smaller piece of our overall business. But there's a couple key points relevant to what was announced yesterday. First is that we will still be a part of eBay's business. We have a term sheet for a 3-year extension where the largest part of the business that we do with them today, the branded processing, will continue to do that. Importantly, that's the most profitable part of the business. There are two other things that I think are relevant. One is that this allows eBay, as you said, to go partner with someone else. Large marketplaces the size of eBay, most of them already do that. So this is a natural extension. But very importantly, it allows us to go out and partner with some of eBay's competitors, some of the largest and fastest growing marketplaces in the world with unfettered ability where we haven't had that before.
So let's talk about profitability here, because there is concern about the profitability of eBay transactions on PayPal. How will this impact PayPal's profitability?
Yeah, so we don't believe that this is well within our plans. And as I suggested, we continue to grow these other faster parts of our business, and we believe that this doesn't do anything to change the profitability profile after the operating agreement versus before.
When will we be able to buy things on Amazon via PayPal?
Well, we'd love to be able to partner with all the large marketplaces in the world. To the extent that we have unfettered ability to go partner with many marketplaces after that, hopefully we can do something there.
How has tax reform impacted your forecasts and desire for M&A?
Yeah, so we're a global company, and we generate a lot of our cash flow offshore, so tax reform is an unmitigated benefit for us. We will actually see our effective tax rate stay in the same range that it has been. We gave guidance yesterday of 17 to 20%. Our cash taxes will actually go up slightly, though, because of the so-called GILTI tax that will be imposed internationally.
This means you have more flexibility for M&A. What might you be interested in? Bill payment, cross-border, lending?
All of the above. So I would say there are two sort of categories that we look at in M&A. One is expanding our geographic footprint. We're a global company. We're in over 200 markets across the world. We'd love to be bigger in some of those markets. But to your point, there are a lot of complementary services to payments like bill pay, like international money remittances that are good for our customers and tuck in really well to the platform that we already have.
We've seen Square now roll out Bitcoin trading. PayPal CEO Dan Schulman has said he's concerned about instability. When might we see something like that on, say, Venmo?
Yeah, so well, not with Venmo, but we've experimented with Bitcoin with our Braintree platform in the past. What we see, though, is that because of the volatility of this currency, it's not something that merchants readily accept. If you've got a 5% operating margin or profit margin as a merchant, and you accept Bitcoin and you see a 10% swing in one day, you're now underwater on that transaction. So I think it will be a while before we see the stability in this currency to where merchants will readily accept it.
What about on Venmo, though? A lot of younger users there. A lot of young people love Bitcoin.
To the extent that our merchants want to accept it and our customers want to use it, then it's certainly something that we will look at in the future.
How about a PayPal app with in-store capability? When will we see that?
Yeah, so we actually have that in certain regions of the world today where we partner with some of the other large technology companies that they authenticate for us, and you can use PayPal. Certainly in-store is something that I think has got a greater foothold internationally. It's a little bit slower here in the U.S., but we want to be on the forefront of that and allow our customers to use PayPal however they want and whenever they want.
PayPal CFO John Rainey there. And one last thing, my book, Brotopia, Breaking Up the Boys Club of Silicon Valley, is out this Tuesday. This is the story of how women have been excluded from the largest wealth creation in the history of the world and what we can do to foster real change. I've been working on this for the last 2 years, and I'm so excited to share it with the world. We will have special coverage on this issue throughout the week, important interviews you don't want to miss right here on Bloomberg Television. And that does it for this edition of the Best of Bloomberg Technology. We will bring you all the latest in tech throughout the week. Tune in each day, 5 p.m. in New York, 2 p.m. in San Francisco. And remember, all episodes of Bloomberg Technology are live streaming on Twitter. Check us out at Technology Weekdays. That's all for now. This is Bloomberg.